Trade tariffs have again increased between the US and China, but markets continue to take it all in their stride. And locally, our AAA credit rating was reaffirmed in late September. A quick update on our market expectations for the last quarter of the year. The news that the next round of US tariffs is to be 10% rather than the 25% feared helps stock markets and global risk appetite. With fresh record highs in the United States, and Asian stock markets have also risen since this confirmation, with the Japanese Nikkei index in the last few days reaching new 25-year highs. Japan is Australia's second largest export market, so warrants attention. And given their increasingly close ties with China's economy, this market is a good barometer. But the fact that the US stock markets remain elevated, even in the face of rising interest rates, is impressive. The US official cash rate, the Fed funds rate, is now at 2.25% after the latest increase from the US Federal Reserve. And another hike is expected in December, with 2 more next year, which will make the US rate 3%, double our official cash rate, unless our Reserve Bank starts to follow suit. Given our GDP rate is at its highest level in 6 years, and our unemployment rate at its lowest in 6 years, it seems only a matter of time before the RBA start tightening our rates, especially with the Aussie dollar falling to just below 71 cents last month. Although the Aussie has recovered some of those losses after Standard & Poor's reaffirmed our sovereign AAA rating and removed the negative watch that had been put in place. S&P expressed confidence that our budget will be back in the black by 2020, irrespective of who wins the next federal election, and they also suggested that our housing market, while declining in some capital cities, can achieve a soft landing. Australian household debt is high by international standards, but as the RBA have indicated, record low interest rates, healthy jobs growth, and strong population growth are helping with the risks of high household debt. Australia's ability to withstand global trade tensions may be tested, but China's recent stimulus program should help, as will the relatively low level of the Aussie dollar. This month, the main highlights will be jobs data out on the 18th, again expected to be strong in line with recent trends, and on the last day of October, the inflation numbers for the third quarter, which will probably allow the RBA to keep rates on hold through to mid-next year. But 6 months is a long time in the markets, so best not get too complacent on interest rates. Till next time, that's the market update from Bendigo Bank.